Webull closed Friday's trade at $14.19 per share, down 19 cents or about 1.3%. On the surface, that's a small move, but it comes at an important point in the stock story. After pushing through the $15 mark earlier this week and holding that level for a few sessions, Friday's close represents the first notable pullback since the breakout. With the stock still well above where it traded just a couple of weeks ago, investors are asking whether this dip is just a pause before another leg higher or the beginning of a reversal. In this weekend recap and week-ahead outlook, let's explore what's driving Webull right now, what risks and catalysts are in play, and what to watch in the coming days. First, it's worth putting this week's price action in context. Webull spent much of September grinding sideways between about $12.5 and $13.5. On Monday, it surged past $14. On Tuesday and Wednesday, it hovered around the $14 level, and by the end of the week, it had pushed to a high of $15.16 before slipping back to Friday's close of $14.19. That kind of stair-step pattern, breakout, consolidation, breakout, mild pullback, is typical of a stock trying to establish leadership. It shows there's real buying interest but also profit-taking and testing of support levels. From a fundamental perspective, Webull has given investors a lot to be optimistic about. In its most recent quarter, the company posted revenue growth of about 46% year-over-year. That's up from the 30% range of prior quarters and signals accelerating momentum. Trading revenue grew even faster, more than 60%, driven by increased options and equities activity. Customer assets on the platform reached record highs, which means not only are new users signing up but they're depositing more capital. Assets under custody drive engagement, retention, and monetization. That's a sign of a healthy platform. The company has also relaunched crypto trading in the United States, integrating it into its main app. This is a big deal because crypto is one of the most volatile but lucrative segments for a broker. When digital asset volumes increase, revenue per user can surge. We've seen Robinhood's fortunes rise and fall with crypto engagement, and Webull is positioning itself to capture that same upside. With the crypto market showing signs of renewed life, Webull's integration of Bitcoin, Ethereum, and other tokens could be a meaningful growth driver in the quarters ahead. International expansion is another important piece. Webull launched in the Netherlands this year, marking its entry into the European Union. That gives the company a foothold to roll out across the EU over time. Access to US equities, ETFs, fractional shares, and options is in high demand among European investors. If Webull can replicate its US success overseas, its total addressable market expands dramatically. Expansion into new geographies comes with upfront costs, but the potential for exponential user growth and deposits can justify those investments. Adding to that backdrop, Rosenblatt Securities recently initiated coverage of Webull with a buy rating and a $19 price target. They highlighted the company's international expansion, crypto relaunch, and attractive valuation relative to peers like Robinhood. That kind of institutional endorsement provides a narrative for momentum traders and validates the growth story for investors who may have been skeptical. From a technical standpoint, Webull's relative strength rating recently climbed into the low 80s. An RS rating above 70 signals a stock outperforming most of the market, and in the 80s it's considered leadership territory. That matters because quant funds, momentum screeners, and institutional models begin to pick up the stock, drawing in new flows even in the absence of big news. It's no coincidence that Webull broke out after those RS upgrades and analyst coverage. So if the fundamentals are strong, the RS rating is high, and an analyst has just set a $19 target, why did the stock slip back to $14.19 on Friday? The simplest answer is profit-taking and testing of support. After a 3.5% gain on Friday of the previous week and a breakout above 15, some traders lock in gains. Others hedge their positions using options. Indeed, there were reports of unusual options activity in Webull late in the week, with deep-pocketed investors taking more bearish stances. That doesn't necessarily mean the stock is about to collapse. Often these are hedges or short-term speculation, but it signals that at least some market participants expect or are protecting against a pullback. The $15 level now becomes a critical test. If Webull can hold above 14.5 and rebuild momentum, the breakout case remains intact. If it slips decisively below 14, that would suggest the rally needs more time. Volume will be an important tell. Breakouts on strong volume that consolidate on light volume are healthy. Breakouts that immediately reverse on heavy selling can be red flags. As you watch the stock next week, keep an eye on how it behaves around those key levels. Looking ahead, there are several catalysts that could influence Webull's next move. Sustained revenue growth is the first. Investors will be looking for signs in metrics or commentary that the 46% year-over-year growth rate can be maintained. That means watching trading activity across equities, options, and crypto. If crypto volumes spike, that could drive another leg of revenue growth. If they don't, one of Webull's levers fizzles out. International traction is another catalyst. Early data points from the Netherlands launch will matter. If Webull can show real user acquisition in Europe, analysts will start to model in bigger numbers for international expansion, which can justify higher valuations. Without that traction, the stock may struggle to sustain a premium multiple. Macro sentiment is always a factor. Fintech stocks like Webull are sensitive to risk appetite and interest rate expectations. If inflation surprises or the Fed shifts tone, risk-on sentiment can evaporate quickly. A favorable backdrop with stable or falling rates helps underpin valuations and momentum. Risks remain as well. Webull is still unprofitable, and losses have widened as it spends on marketing, compensation, and infrastructure to support growth. Investors will tolerate that for a while, but at some point they will want a path to profitability. The $1 billion standby equity purchase agreement with Yorkville Advisors gives the company capital flexibility but also raises the risk of dilution if shares are issued aggressively. Competition from Robinhood, Fidelity, Schwab, and others isn't standing still either. They're innovating, cutting fees, and launching features to win customers. And while crypto trading is a growth lever, it also ties Webull to one of the most unpredictable markets. If crypto sentiment sours, it could drag on trading volumes and revenue. So how do you frame this for a weekend video that recaps and looks forward? Start by recapping the week's action. Webull broke out above 14 early in the week, surged to 15.16, then pulled back to 14.19 on Friday. Emphasize that this is a normal ebb and flow after breakout, not necessarily a reversal. Highlight the key drivers of the prior rally: analyst initiation with a $19 target, RS rating climbing into the 80s, strong fundamentals with 46% revenue growth, crypto relaunch, and European expansion. Note the unusual options activity and profit-taking as a reason for the pullback. Then pivot to the week ahead. Outline the key levels to watch: 14 as support, 15.5 to 16 as resistance. Explain what a healthy consolidation would look like versus a reversal. Lay out the catalysts that could push the stock higher: continued strong trading volumes, positive updates on crypto and international expansion, and a supportive macro environment. Balance that with the risks: unprofitability, dilution, competition, and crypto volatility. End with a balanced but optimistic outlook. Say something like, Webull's fundamentals and technical momentum still point to leadership potential. If the company executes and the market stays supportive, the path to higher levels remains open. The pullback to 14.19 is a chance to test support and build a base for the next move. The coming week will reveal whether buyers are ready to step in again or whether the stock needs more time to digest its gains. This approach gives viewers a clear picture of what happened, why it matters, and what to watch next. It also positions you as a thoughtful guide rather than just a cheerleader. You're showing both the bull case and the bear case, while keeping the focus on actionable levels and catalysts. So to sum it up, Webull closed Friday at $14.19, down 19 cents or 1.3% after a week of breakouts and consolidation. The fundamentals remain strong with accelerating revenue growth, record customer assets, crypto relaunch, and international expansion. The RS rating is high and an analyst has set a $19 target. The pullback looks like profit-taking and support testing rather than a breakdown. The key test next week will be whether Webull can hold above 14 and rebuild momentum. If it does, the breakout case stays alive and a path to higher levels, even $18 or $20 by year-end, remains plausible. If it fails, the stock may need more time to digest its gains. What do you think? Is Webull setting up for another move higher, or is this rally already running out of steam? Share your thoughts in the comments, like the video if you found this analysis helpful, and subscribe for more updates on Webull and other fintech growth stories. Thanks for watching, and I'll see you in the next one.